GameStop is at it again. Hi, I'm Andrew with Investors Hub, and today we're going to be talking with Paul Schatz. He is the president at Heritage Capital LLC, and he's going to be talking to us about what's going on with GameStop, and he's also going to give us some themes that he thinks are going to be really strong in 2021. Please note that our videos are not designed to be direct investing advice. We're here to gather the perspective of different investors. Our channel and our content should just be one stop on the journey of trying to find out where to put your money. So why are we seeing GME rocket off into the stratosphere a second time? And are we going to see share prices over $400 again?
Well, there could be a confluence of reasons why GameStop is soaring again. But I'll say this. First of all, options expire tomorrow. One plausible reason could be that some professionals are stuck either with not enough stock or short, and they are levitating GameStop for really a short-term trade. I don't think, given the volume that we've seen, that's really the case. Something else is clearly at play. Like anything else in the markets, we always speculate on the reasons, but the true reason never becomes apparent until after the trade is over. So there were certainly some DNA markers that something was changing in GameStop 3 days ago. And it's certainly paying off for those who played at that time.
So who do you think the main actors behind these price movements are? And is the SEC going to come cracking down?
I do not think the main actors are mom and pop buying 100 to 1,000 share lots. If you watch how the stock trades, the data don't support the behavior, if you will. On February 22nd, we saw the stock gap higher at the open, like it's done many times. But there was something unusual about that gap that I watched. In hindsight, I wasn't watching it live in person, but right before that, the stock gap higher on Feb 22nd, volatility of the stock, kind of like an alligator's jaw, was clamped down. It was tight. I mean, volatility was almost non-existent. And then all of a sudden, that one gap, volatility began to open up, volume started to come into the stock. That said, something else was at play, and it wasn't just normal mom and pop trading. But the real key, frankly, was yesterday, about, 2:45, 10:03, you started seeing massive amounts of volume come into the stock. That is not, again, a Reddit surge of trading in GameStop. That tells me, to answer your question in a long-winded way, that clearly there were professionals involved, just like I have speculated without any shred of proof. But that whole surge to almost 500 was not these, the Roaring Kitty and his minions, but there had to be actors posing as mom and pop who were perhaps pensions, mutual funds, hedge funds, whomever. But there was big and real money flowing in back then, and there was big and real money flowing in yesterday from 2:45 to 4 o'clock. So, and there are real people in this. There are big money players in this. Perhaps someone is still caught short. Perhaps there's some kind of options. Perhaps there's some arbitrage. But this is real money. You asked about SEC crackdown. I'll say this. My issue is not how the stock traded. This is what happened almost every day during the dot-com bubble. I've been doing this 32 years. This was sight and verse. So dot-com bubble, you had companies that not only didn't they have any earnings, they had no revenue. And the message boards were truly the Wild West. People were making up facts back then, posting them as real news. Today, it's tamer, but you're still having message board influence. Nothing wrong with it. I love the fact that individuals are getting involved in the markets. There's nothing better than having more people involved in the markets. Well, the SEC crackdown, what they should do is, if you or your mutual fund or hedge fund own more than 5% of a company, you have to disclose it. Hedge funds actually have disclosures, just like Warren Buffett does. but they don't have it on the short side. That's the playing field should be level. We should know, just like we know who's long the stock in big size, we should know who's short the stock in big size. That'd be a helpful regulation that levels the playing field and is fair for all. Are they going to go after, the brokerages or trading houses because of GameStop? I don't think so. I don't think this was illegal manipulation. That's a super strong phrase that people throw around. The markets function normally, and that's what you want. You may not be happy with the outcome. You may not be happy with how it traded and how wild the moves were. But as long as the infrastructure of the market, price discovery worked, that's what you want. You want a free and fair market.
So you mentioned to me that you had some themes for 2021 that you think are going to be hot and exciting. Talk to us about that.
Yeah, we came into the year. Some years I come into the new year with high conviction on a bunch of themes. Other years I come in, if the year was too easy, it's harder to follow up. Last year was anything but an easy year. So coming into this year, I definitely had high conviction on a number of themes. I don't want to say it's exactly a first half and second half by June 30th, but our themes were really split. I thought equities would see at minimum a 4 to 8% decline in Q1. I felt strongly about that. We just got 4%. I think there's still more coming, but I think it's a tale of two parts of the year. The first 6, 7, 8 months of the year, I think equity investors in a risk-on posture are going to be well rewarded. I don't think that's the case for the second half of the year. I think, small caps, the first half of the year-ish or so, trounce large cap, and cyclicals trounce growth. And then second half, I think we're going to do a reversal. Whereas, the first half, I thought semis and banks and industrials, what else do we like? Materials, transports, energy. Those are all first 6, 7, 8 months of the year stories. Second half, I'll take a total contrarian view and say it's boring, stodgy staples, utilities, and perhaps REITs. So that's our theme on the equity side. Bond side, my target was 1.3 to 1.4% on the 10-year. We've kind of sort of gotten there and exceeded it by a little bit already. I think bonds are going to be a buy the farther along we get into the year. That's certainly not consensus thinking now. The inflation genie, which we started to see last year, is out of the bottle. She's not going back in anytime soon, but bonds could still see a rally second half of the year, last 3 or 4 months. And finally, on gold, I have a very strong conviction that before the next leg higher on gold begins, I think gold's got to be sub 1750. We're getting close, but I think that's still a month or 2 or 3 away. Gold under 1750, I'm going to become super excited for a move that could last months or quarters.
Any final thoughts?
If you're an individual investor and you're seeing people make crazy money in GameStop or cannabis, and the SPAC area is really crazy. This is not a new movie, and this is not my first rodeo. This is very similar to what we saw second half of 1999. I caution people, don't look for the next takeover. Don't look for the next GameStop or the next penny stock in the cannabis space. That's not how you make money long term. If you have a windfall right now, enjoy it. On the way up, take your chips off the table, harvest your acorns, because I do feel strongly that sometime in the next 3 quarters or so, just like we saw in the dot-com bubble, markets are going to peak, and risk on people who take excessive risk are going to be severely and strongly punished.
Thanks for watching. Be sure to like, comment, and subscribe if you like the content. It helps us grow, and it's the best thing you could do for us. And I'll see you again soon.